Welcome back to the Till. If you're new to my channel, it's truth in lending and in life. And in today's video, we're going to talk about winning strategies in a competitive real estate market. That's right. Who am I? My name is Kevin Retcher, owner of First Meridian Mortgage. I've been a mortgage broker for 30 years, licensed in Virginia, Maryland, D.C., also a licensed realtor for over 20 years and an independent insurance agent. I own KSA Insurance Agency. So I'm uniquely qualified to not only work with buyers, both on a realtor side and on a lending side, so I can blend those together. Now, 90% of my business is just simply doing mortgages for you, but I have the unique perspective of knowing what buyers agents go through in trying to help you win that perfect home. So let me set the picture for you. You've gone to an open house, you haven't prepared, and listing agent gets you to put in an offer, or you quickly find a Redfin agent or another agent and say, I want to go get this house, right? And you haven't done all of the work, but yet you see yourself living in this house. Wife likes the kitchen, you like the garage, whatever the case may be. You put in your offer, and your anticipation is that you're going to win this, right? This offer. And then you get a phone call. And that phone call is from your agent to say, there was a lot of offers. You were close. You were number two, number three. You were number 8. But you didn't win that perfect home that you thought you were going to have, right? And that's a disappointment. And in thinking about that, this last weekend I had wrote 4 contracts, and we won 3 of those, and 1 we were just not even close, right? So I want to walk you through. I'll take winning 75% of the time, writing 1 contract for 3 of the individuals, and not writing multiples for each and every one of them. So I'll take that track record. So I used a little bit of AI. I used a little bit of having AI screen some of my videos, and also added some of my information in this guide. All right. So if you're a realtor, hopefully I give you some tips. If you're a loan officer, hopefully you get some tips. And if you're a buyer, I definitely want you to hone in and get some tips, right? So understanding what competitive means, right? This day and age, this data came from, I think, Realtor.com, but in general, it said last year 28 to 35 days. I would argue it's probably more 25 to 32. My average CTC, which is clear to close, so the time from underwriting to having all the paperwork done in underwriting, and then you have a couple days to close, was 12.6 days last year. So from a speed standpoint and certainty standpoint, that is huge when it comes to being able to negotiate faster turn times on your offers, right? So who is on your team does matter. The competitive landscape right now is closing super fast is 13 to 18 days. 18 to 23 is very appealing to most sellers. And then 23 to 30 would be a quasi normal time frame. No one's pushing. So you definitely want to be prepared. And that's the most important thing I can stress to you, is to know your numbers, right? When it comes to being ready to actually make offers, The one thing I want you to do is to do a budget. Understand your boundaries before touring homes. Understand what your max payments are. You should do a fundamental budget 2 months before you ever start looking at homes. You should know what your what your leftover residual income is after you've paid all your bills, your rent, and everything. And then you can use some of those monies to add to the rent and actually buy a home that you know that you can comfortably live in and still be able to do your normal things that you're doing, right? You need to understand how to compete with multiple offers. 1, stay patient. 2, do homework. You need to decide what your offers. You need to understand what contingencies that you may or may not be asked to waive by your realtor, right? Here's the thing. If you have 2 different parties telling you different things, you need to get everybody on the same page. So fundamentally, you have 3 core individuals here, and that is the buyer, your loan officer, and your agent. If your agent is telling you to remove certain contingencies and you haven't checked with your loan officer, you can be putting yourself in harm's way. So you need to understand contingencies and have that conversation during your pre-qual or pre-approval process. You need to know your down payment and the closing cost. Ask for a loan estimate on an approximate house that your loan officer thinks that you're approved for. Understand every line item on a transaction. You should have a framework of knowing exactly what costs are. You should know what an escrow account is, how much money might be going into that, and what your cash to close might be on a designated house. If you want to pick a house off of Zillow and say, this is a listing that I might like to buy, give me an estimate on this and let's go over it. Super helpful. That way you understand cost numbers and we can get beyond that and go to the next step, right? In your financial readiness part of that checklist is understand your credit, right? If you don't know how good your credit is, you can get freecreditreport.com and get a credit report. Make sure your utilization on credit cards is 30% or below. Okay, that's a standard tip. Usually helps people get a lower interest rate by having better credit. Avoid any new credit lines. Make sure you're gathering all your paperwork, your W-2s, your tax returns for 2 years, 60 days worth of pay stubs, 30 days, 30 days worth of pay stubs, 60 days worth of bank statements. That should be corrected. If you're self-employed, 2 years tax returns. Document any large deposits. Notify your lender of any job changes or income changes. And then last but not least, understand and know your debt to income based upon the purchase price that you're comfortable in buying. Now, big pro tip, if you want a mortgage payment to be $3,500 exactly, a good loan officer can back straight into that and tell you exactly what the loan amount and purchase price should be to hit that mark. So knowing what you can afford and knowing your debt to income ratios are hugely important. Knowing how much money is left over is extremely important. Now, most agents out there are going to want you to say, I want a pre-approval done on, before I'm going to show you homes, or a pre-qual or a lender letter, right? So when it comes to looking to buy a house, who do you go to first? Loan officer or realtor, right? So I have a couple different questions there. One is, can you pay cash for a house? If you can pay cash, you can go directly to the realtor. If you can pay cash but don't want to pay cash, then I would go to a loan officer. Now, independent loan officer works with probably 50 to 100 realtors in a year. A realtor might work with 10 to 20 potential loan officers. So I feel that if you go to the lending side first and get pre-qualified, if nothing else, you know what your numbers are, and you can ask them to refer you to an agent, and then you can also shop on your own for an agent, and I think you get the best of both worlds there. Then you can ask those agents that you've interviewed for any loan officers that they may recommend. So you can kind of cross-check back and forth, right? You want to build a team that's cohesive for you, right? And that's most important. When it comes to pre-qualification or pre-approval, in many cases, those two things are the same, but there are a lot of agents that do not think a pre-qual is the same as a pre-approval. And we'll break that down real super fast. In Virginia, as a mortgage broker, if I pulled your loan application, got your credit, got your W-2s, got your pay stubs, got all the documentation, ran it through underwriting, automated underwriting, DULP, that is the same thing, the same software that the lenders use. So in 30 years of doing this business, I have never missed a closing date. I'll put my pre-qualification letter against any pre-approval across the country. Here's the thing. If a lender is closing the loan, they can write pre-approval without you having done any of the work. You can just give them a verbal, and because they're the lender, they're allowed to write pre-approval. I, by law, cannot write pre-approval unless I send it to the lender to actually get pre-approved. Now, the good news is I told you my 12-day, 0.6 days to CTC. That's faster than most lenders. The other flip side of that is if it's a conventional loan, I can actually submit it after I've done the pre-qual to get a pre-approval through one of my lenders within 30 minutes. So if you absolutely need the pre-approval to make the realtor happy, I can do that on conventional loans. The only one I can't do that super fast is the government, FHA and VA, because of case numbers, right? Pre-approval, though, a lot of people will say a pre-qualification is just an estimate, and that's really not the case. You need to understand who's doing the work and playing in the sandbox, so to speak, right? We can send a loan up to get a TBD approval from lenders also, and then you have cash offers. So you want the most powerful team and letter that you can get, right? So things that make a letter stand out and the things that you should be looking for. First and foremost, it's really the loan officer, okay? Once I give you the letter and that letter is submitted to a listing agent, your buyer agent should be on the same team as the loan officer, right? I often ask the buyer's agent to CC me on the offer, because if the listing agent calls me and says, hey, I got your lender letter on Joe, and it says blah, 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 blah. If you didn't CC me on anything, I'm asking, what price did you offer? What are the contingencies? What's the closing date? And I look like an idiot, right? If you're on my team, you CC me on that. Listing agent, you tell me that you just submitted an offer. Instead of the listing agent calling me, I'm going to call them, right? I'm on your team. It's my job to help you win, right? So I'm going to call on your behalf, and it doesn't matter if it says pre-qual or pre-approval. They didn't have to chase me down. I send them my pro card. I tell them that they can call me. I tell them I've never missed a closing date in my life. I tell them that my reputation goes out as the business owner and as the loan officer. And by the way, I am a licensed agent, so I know what you need. Those things hold so much weight. If they want proof of my expertise, they can go to Scotsman's Guide, the Washingtonian, they can do research and see all the reviews on Google, Yelp, Zillow, Redfin, all of those things help you win your deal, and that's your team working for you, okay? So you can look through these. These are some bullet points, but I stress that you've gotten pre-approved, you've checked your numbers, you know your numbers, your teammate is communicating, right? That's going to help you win. Next, clean offer and minimizing contingencies. Okay, let's talk about appraisals. Can I waive the appraisal? Should I waive the appraisal or not, right? So once you have the address, and I've already done your homework on the pre-qual, pre-approval, and I can run it through the automated underwriting engine, and I might find out that, yes, you already got a waived appraisal option through Freddie or Fannie. If Freddie or Fannie tells me that the price is good, then I'm usually good. I'm going to save the $600, and I can waive that on my contract and make it stronger. But here's the thing. Let's say you have that option, but you also have a contract with financing. Should you pay the $600 to see whether or not you can renegotiate a lower price by doing the appraisal? And here's the thing. If your agent gave you a CMA to start with, she should or he should be telling you, this is where I think the value is going to be. These are the 3 comps that most support that value. That's why we're offering X as a price. If you escalated really high and you still have the appraisal option, then you should do the appraisal, even if you have the waiver, because you can negotiate the price. But if you have no ability to negotiate the price, if you waived that option before you even knew if you had the option, then take the free appraisal, okay? Save the money. So that's one of the big items. Waiving your financing contingency, right? Had an agent push me the other day to try to waive my financing on a condo. Ain't no way you should ever waive a contingency on a condo unless you can pay cash. Remember the rule, okay? Outside of that, if you need financing, the condo complex has to be approved for Fannie, Freddie, VA, FHA. It's got to meet guidelines, right? They just changed one of the big guidelines to having condos have 15% reserves from 10. So most condos out there are going to have a large increase in rebuilding that extra 5% reserves that condos now need. So that's something that you need to consider, but don't waive your financing contingency on a condo, okay? If it's conventional, need to make sure that your loan office is good, make sure that your pay stub's up to date, make sure that your credit report's up to date. Ask him, is he comfortable you waiving your financing contingency, okay? If you have an HOA or condo, that could give you an extra 3 days or so of comfort. But as I said, don't ever waive it on a condo. You could waive with an HOA. Doesn't have the same impact that condos do, okay? Home inspections, know your contingencies. You know, is it a home inspection with the right to ask for repairs? Is it a void, or are you just waiving totally? If you have a home sale contingency, right? Those things can be a negative in the eyes of an agent. If an agent says, I cannot win a contract with you having a home sale contingency, he might be right that you might not win every single time that you have that as an option. But if he's not willing to try, I'd find a new agent, okay? Quite simply, I have agents that do it all the time. you might have to offer something else in lieu of that. Get creative for them to turn it into a yes, right? So an example might be, if I don't settle by X date, I'll bump my price 10 grand. Then they know you're serious. And as long as you meet those deadlines, you don't lose any additional money. That's just one little tip that you could do. Ask your agent other things you can do if you have that as a required contingency. Title. Never waive title, because if there's someone that has rights, things of that nature, to the property, you could lose your down payment money. Use escalation clauses to your advantage. But here's the thing, and I'm going to show you something real fast that every agent should do for you in conjunction before you make an offer. I would argue that the agent should do a CMA, half-mile radius, on your house of like homes. And this is one that I did on a client recently. And in this particular instance, things that I want to look for is days on market, percentages above ask price. In this particular situation, it was Arlington, right? I told my client that I thought that this house would sell for over 1.4. And how I backed into that price really was, you had escalations of 12%, 9%, 7% on very attractive similar homes, and the list price was essentially 265. So when you went to a scenario of 10 or 12% above that, you were essentially at about 1.4. And that's where it ended up escalating to. And so you want to use these percentages to your advantage and understand, and also look at the dates, because a December close date versus February, March, or April are different time frames in different areas. This one in April, 12% above, right? So if it's in a hot area, look at the percentages, and this is what I want you to do when it comes back to making your strategy. If you're going to go aggressive and be above ask, give 60, 70, or 80% of what you're willing to escalate to flat out in a higher price. Escalate the last 20 to 30%. By doing so, you eliminate a lot of the competition that felt they were going to come in at ask and escalate from there. Those contracts get put aside because they didn't show that they were serious about the house and didn't do their homework, okay? Now, your agent should also be, prior to this, once they do a CMA, should be contacting a listing agent and finding out every bit of information that they can. The time that they want to be out of the house, do they need a rent back? How long have they owned the house? They should actually pull up Remine and see how much money the seller actually owes on the house and when did he buy the house. Is he in the service? Is he getting PCS? A lot of these intel questions matter when you're making your offer, okay? Closing dates, free rent backs. In some instances, seller paid closing cost concessions, being human and trying to present the very best offer and contract based upon all the intel that you can derive is going to help you win offers. Closing dates. How much might your buyer's agent be asking for compensation? All of these things could come into play to include earnest money deposits. If you have a lot of cash sitting in the bank, make a larger deposit, right? 1% is okay, but 10, 20, 30%, if you're putting it down as a down payment and you know you're going to perform, then there's little to no risk, right? So the winning edge is the lender-seller communication. I told you about that phone call that is so imperative to winning contracts. When a listing agent does not have to track down a loan officer, if they've already worked with that loan officer, I've done $3 billion worth of loans in the Northern Virginia, DC, Maryland area. They may have done business with me 3 years ago or last week. They can look up my name, my company name, my phone number has not changed. I'm a loan officer that's had the same phone number for 30 years. I haven't hopped from one bank to another bank to another bank to another bank like a lot of loan officers. There's stability behind the brand, okay? The realtor's role, okay? Let's talk about it from that standpoint, and I'm going to put the realtor hat on a little bit, right? That intel that I'm talking about, the relationships they have within the community, the knowledge that they have of Bright, Remen, other RPR. If the agent does not do a CMA for you before you write a contract, I probably would fire him. If he doesn't or she doesn't say, I've got to see the property. If you saw it at an open house and just call them up, hey, I want to write an offer. If they don't want to race out right away to check the house before they write the offer, unless there's a time deadline, find another agent. If there's a time deadline and he's hopping on it for you, then so be it, okay? Things that you want to check for, coming soons. Thing happened today. Someone wrote an unseen offer in Arlington on a 1-2 house. Listing coming soon was next week. And they wrote a 1.4 non-contingent 2-week offer, all cash. Odds are you're not going to win that house. Just move on, right? That's not a woulda, shoulda, coulda. Unless you want to get that aggressive, which I don't feel you have to. But if you have some intel on the perfect house, maybe you know neighbor things or something of that nature, and you've had someone say, oh, this is a perfect house and all those things, and you have enough cash to cover any real problems, then you can be that aggressive if you want, right? Know the exact price per square footage in the area. Know the seasonal patterns. Track active listings, neighborhoods, HOA restrictions, research school districts and the boundaries. Do your homework on the area that you want to live in throughout the process, months before the process. Get your pre-qual, pre-approval done. Credit reports are good for 120 days. So essentially, your pre-qual is good for that time frame. Maybe you have to do another one if you don't find a house within that time frame. Follow up with your loan officer once a month. If you're randomly looking at homes, just maybe in a specific area, keep your pay stubs up to date, your bank statements up to date, and don't take out any new credit. Do not do any affirm transactions that allow you 120-day, same as cash. If you do anything that pulls your credit, talk to your loan officer. Give them a heads up. During the loan process, 10 days before settlement, they're going to do a final verification of employment, even if we do one in the beginning. And they're also going to pull down what's a soft pull and see if you've pulled out any new credit. So you're not going to be able to hide anything. So you might as well let us know, right? Things you can do, pre-offer, walk-in talks, say you want to do a home inspection, so you can remove a home inspection. Like if you really know you're going to like this house on Saturday and you want to put a really strong offer in, spend the $600 and do an inspection on that Saturday. Just get the permission from the listing agent. Majority of the time they're going to do that as long as you're not bothering anybody, because they know you're serious and you're going to be bringing an offer probably with less contingencies, right? You've already done the homework and they like that, right? You want to put your best foot forward, and if a property is lukewarm, and you say, I'm okay losing it, and you want to be a little less aggressive, that's okay. But if you really want a house, put your best foot forward, okay? In some areas, you can do a personal letter if you really so choose. Sometimes they can win favor. If you have the opportunity to go to an open house, or if your timing's just right, sellers are bringing their dog home or whatever, and you have an opportunity with your agent to communicate and talk with sellers. Sellers love to talk about their home to potential buyers, but it's your opportunity to audition, and they get a feeling on whether or not they want you to actually be the owner of their precious house. And in many cases, having those bump into them is good. Just don't seek it out, because then it's like you're stalking, okay? So let's talk about quick reference checklists. So you want fully underwritten. You want to know where your down payment is. You want to know. You want to have reserves after you close. You want to have pre-offer credit pulled, completed, no new accounts in 60 days. You want to know your desired price range. You want to know your contingency strategies, okay, with your agent and your loan officer. Earnest money funds are ready, so you can write a check to your agent wherever they tell you to actually write it. Maybe they write it to the title company. Maybe they write it to their buyer's agent company, but don't generally give it to the seller agent. I tend to not do that, because if deal falls through or whatever the case may be, it's a little easier to roll it to the next deal if, in fact, you're in control of those funds. Pre-inspection scheduled if you're doing one. Personal letter if you're going to write one. If it's allowed, talk to your agent about that. And know your escalations and your maximums. Here's the thing, if you're going to escalate, do it in a way that you would want it done to you, okay? The golden rule, right? So if you have a situation where you have a financing contingency and someone doesn't, maybe you offer an escalation at $5,000 instead of $1,000. $1,000, this guy's gonna be like, I don't want him to have a home inspection, right? But at $5,000, I'm like, I don't have $5,000 wrong with my house. I'm good. I'll take that risk, right? So know how to offset a negative with a positive, right? How do you offset a negative with a positive? That's how you should write every single contract. What are my negatives? What are my positives? How do I increase my positives? Your agent and your loan officer should be able to work together to help you with that. So the realtor's pre-offer submission checklist should call listing agent, get all the intel that you possibly can get. dates, certainty, explain your borrower's position along with CCing the loan officer on any and all contracts. Make sure that he's aware that you're submitting the contract so the lender can call on your behalf. Before that offer goes in, absolutely every offer, before you submit an offer, make an offer, even talk about price. The CMA with a half-mile radius, hone in on a house that is most similar in price and size and bedroom and count. And if you don't have that perfect comp, then go by square footage and figure out what the average square footage is in the area, and then also what percentage below or above ask via that CMA, just like I showed you. Okay, discuss your escalations. You want to have your packages as a realtor ready, your cover letters, your lender letters. Make sure you know how to get a hold of your loan officer to update that lender letter. Maybe he gives you authorization to put the address on there, whatever the case may be. I generally use a Word document so that I can, if I'm on the road and I don't have access to a computer, that it can be changed. I never want, as a loan officer, want to be the holdup on you getting your contract in. Clients should already know how they're going to do their EMD deposits, how much that's going to be, what contingencies that we're thinking about being able to waive, where that buyer's comfort level is, everything, so that when you find that right house, you can hit the ground running, get that contract in as soon as possible with the greatest amount of intel. Realtors should be checking Remen for how much they might owe, what type of financing they did before, intel on what they need. Do they need a rent back? What's their timelines? Anything to give you the edge, and then relay a lot of that information to the loan officer so he can be on your side. On the lender side, we want to be prepared, fully underwritten, and ready, right? Quite often I tell people I work 7 days a week, and realtors might call me on the golf course, and I've got to be able to get them a letter. So I've adapted my business to be able to provide a letter that can be modified with my instruction on what to do, and I always qualify for someone a bit above the letter price so that I don't have to run back to a computer and double check something. Loan programs loan estimates should all be done on homes when they're offered. Again, I should get CC'd so that I don't get blindsided by a phone call from the listing agent. DTI and reserves, you want to make sure the clients have those as a lender. Title and escrow should be pre-selected. Everyone should know who's going to be used if we have the choice, okay? If we don't have the choice, then ideally we want to try to negotiate a fair price wherever we may be mandated to use. We get the appraisal ordered immediately. We get you locked in, get the paperwork out to you as quickly as possible. Make sure I get that ratified contract right away. If you sit there and shop after you've gotten ratified, you typically have 7 days to make a loan application, and you're going to change lenders. I always figure that you didn't do your homework to start with, if in fact you're changing lenders after the fact. Maybe interest rates have shifted or moved. Maybe you have a rate lock strategy. I'm not a fan of floating on purchases. There's always a risk. Buyer education, if you have any questions, once you're ratified, in theory, most of your questions should be already have been answered at least once, and maybe you're just recapping some of those as you go through that process. But a lender should be pretty much on point at that point. Working with First Meridian Mortgage. Hopefully, if you're in the DMV, you'll choose to do business with us. We're a mortgage broker. We've been in business for 30 years. We shop 20 to 30 different lenders on your behalf, and we're trying to put you with the right lender for the right needs for the right individual, okay? But here's the thing, I make the same money with all of them, so I never place someone with a lender based upon my wallet. I'm always thinking about your needs and using the investors that are appropriate for you, okay? So I put your needs first, my needs are the same, and we both win in that environment. I promise to communicate with your team, your title company, your listing agent, your buyer's agent, whatever you need. We've done this successfully for over 30 years. I've been ranked on the Scotsman's Guide top 200 in the nation as a loan officer for volume multiple times, and I always make the list in one capacity or another. Top 75 veteran mortgage loan officers that are a veteran, and about 40% of my business is VA loans. So in general, if you're looking for a lender that has a lot of knowledge and capacity, Kevin Retcher at First Meridian Mortgage has 30 years as a mortgage broker, 20 plus as an insurance and, agent and a realtor. So this is your winning strategy playbook. How you choose to play the game may or may not affect your outcome. My goal here is to stress that if you properly prepare and put your team together and actually understand some of the most important pieces of the wheel, then you're going to win. I highly suggest the CMA and proper analysis of that can help you win more contracts, and it's not done enough. Know the math, know the numbers, know your math, know your numbers, know your escalation capabilities. 90% of all this is knowing your numbers and knowing the math. And I know that you'll be successful. My name is Kevin Retcher, owner of First Meridian Mortgage. This has been a complete playbook. There will be a link to that in the video below. Semper Fi to all the Marines out there. I'll talk to you soon.